Let's get a few things straight there. I don't care about the gold silver ratio, but that talks about scarcity. It doesn't talk about utility, and it doesn't talk about the fact that most silver that's produced is produced as a byproduct of other metals, not from silver mines. I would also remind people who talk about the fact that silver is below its all-time high that that's its nominal all-time high. That $50 silver number was at a very different dollar. In order to be at a real all-time high, it would probably have to have three digits to the price. But let's leave that aside. The last three precious metals bull markets that I've lived through have been led by gold. When the generalist investor comes in down into the space, attracted by the momentum established in the gold price, leadership changes from gold to silver. I don't know why that is, Daryl. I suspect it's because the lower unit cost of buying silver relative to gold. I don't actually know. But what I do know is this: when it occurs, and it will, you're not going to need Rick Rule to tell you it's occurred. When the silver price moves, it really, really, really rocks. It really, really, really rocks. When that happens, if you're on the floor of the VRIC, you'll see a euphoric response. When I was a young man and I came into the business in the 1970s, there was one little silver stock. It was a little silver stock then called Coeur d'Alene Mines. It ran from in 1970 10 cents to in 1981 $65. Now, unfortunately, I was too young and too dumb and too broke to participate in that. But the next silver bull market that came along, I was a little older, 20 years older, a little better prepared, and we got involved in two very small silver stocks then. Silver Standard, Bob Quartermain's company, and Pan American Silver, Ross Beatty's company. We financed Silver Standard at 72 cents. We financed Ross Beatty's company at 50 cents. And within 6 years, both of those stocks had risen to over $40. Those are truly strange and wonderful moves. Unfortunately, I haven't been able this cycle to find anything as cheap as Silver Standard or Pan American Silver, particularly anything run by as fine a guys. But you are going to see a clutch of junior silver explorers turn in some dramatic performance. Your viewers, of course, are going to say, Rick, exactly when will this lovely event occur? And I don't know the answer to that. I don't know the answer. What I do know is you better be early, because if you're late, you're going to leave a ton on the table. Well, to begin with, I urge people to own the number of stocks in their portfolio that corresponds with the number of hours per month they're willing to work. So let's say you're willing to spend 10 hours a month studying your gold stocks. 10 should be the number you own. So if you want to buy another one, you have to sell one. Warren Buffett talks about that. He says your portfolio is your hog farm. And if you've got room at the trough, that's your money for 10 hogs. If you're going to add a new skinny hog, you got to kill an old fat one. That's all about relative valuation. But we're coming into a market that's going to test people with regards to that. They're going to be making money on their mistakes. They're going to be really, really, really aggressive. What I do in the speculative stocks, Daryl, is, well, there's actually a long course on this, but the easiest answer is if you buy a stock in anticipation of the answer to an unanswered question, like they're gonna drill a hole and the hole's either going to work or not, right? And if it works, the stock's going to triple, and if it doesn't, it's going to fall by 25%. Sometimes in a bull market, the expectation of the outcome causes the stock to double or triple before the outcome occurs. In other words, you bought it in anticipation of a drill hole. Before the hole is drilled, the stock doubles. If that happens, man, you sell at least half. At least half. Get your money off the table. Answer the unanswered question with the house's money. When the market is going crazy enough that stocks are going up in anticipation of the answer rather than in response to the answer, take some cash and run. The second thing is, if you make a mistake, if you buy a stock because you think XYZ is going to happen, then it becomes apparent it's not going to happen. Let's say you bought the stock for $1 and you think if XYZ happens, it's going to go to $3 or $3.50 or $2, whatever the number is, right? But it becomes apparent that XYZ isn't going to happen. And the stock isn't selling at $1 anymore. It's selling at 70 cents. Stomp it. Kill it. If the reason to own a stock goes away, the stock has to go away. So many people say to me, Rick, I'm going to wait till I break even. Well, why are you going to break even? The reason that you wanted the stock is history. The stock has got to be history. You know, Daryl, that I review people's portfolios for them at Rule Investment Media. And sometimes I talk to people about their portfolios, invariably when the portfolios are too big. And the conversation goes like this. The guy says, well, I'd like to ask you about some of my stocks. Ask away. Well, the first one on the list is Amalgamated Aardvark, right? 2 A's. And I say, or he says, what do you think of Amalgamated Aardvark? And I say, well, I don't think anything of it. Until this moment, I was blissfully unaware of its existence. What do you think of it? He said, well, I don't know. Well, why do you own it? Well, Bob Bishop recommended it. Oh, Bob Bishop's been retired for 15 years. Well, I can't sell it anyway. Well, why can't you sell it? Because I paid $4.50 for it and selling it for 40 cents now. And if I sell it, I'll lose $4.10. And then I have to say, sir, you've already lost that $4.10. The question is, what are you going to do with the 40 cents that's left over? And if there's no reason to sell a stock, to own a stock, you got to sell a stock. And that's really hard for people. Really, really, really hard. But, we're playing this game for money, Daryl. This is not a dress rehearsal. This is your life. It's your kid's life. Mm-hmm. You got to be able and willing to make those decisions, or you got to do something less risky with your money. Well, let me personalize it for you. Your new employer, the VRIC, their conference is going to look like a love festival this year. The gold price is doing well. The senior gold stocks have started to move. I've been through 3 prior precious metals bull markets, Daryl. And what happens every time is that leadership in the market goes down the quality trail. It goes from gold to the best of the best, to the best of the rest, to the single asset producers, to the junior producers, to the developers, to the explorers. The bottom of the list, those small companies that populate the Vancouver Resources Investment Conference, they move the last, but they move the fastest and the furthest. And I suspect, you've already started to see, you were at my conference, the difference between this year and last year was noticeable. Last year, people were respectful. They were studying. They were working hard. This year, they were buying stuff. It was a very, very, very different conference.
2023 was
suspect
way different.
The mood at the VRIC this January will be euphoric. First of all, it's profound. I remember on your show, Daryl, in 2023, your listeners expressing skepticism at best. The gold had moved, but the gold stocks hadn't moved. And I remember saying to you, well, that makes perfect sense. The gold moved because central banks buy it, and they don't buy gold stocks. So asset class that has a buyer moves. Asset class that doesn't have a buyer doesn't move. The ETFs, the gold equity ETFs, didn't really begin to move until 18 weeks ago. And I think really it was the share price increases that you saw in Agnico Eagle and in Wheaton Precious that led to the beginnings of the influx of the money into the ETFs. Understand that the ETFs are mostly market cap and volume weighted, which means that they will exaggerate in their early stage the market response of the biggest and the best companies. But valuation anomalies will occur. You will see the biggest and the best companies trade at a multiple to net asset value for the big companies and at a discount to the net asset value for the smaller companies. When that happens, 2 different things happen. Value arbitrageurs, old cheapskates like me, begin to buy the stocks that are trading at lower valuation multiples. And if we don't do that, the big companies take over the little companies. But either way, the gap begins to go away. So the circumstance that you've described is absolutely accurate. I don't think that there's any question anymore that we're in a gold bull market. The question becomes, what stage of the precious metals market are we in? And probably at the VRIC, when does the flow of funds come down into the juniors? And oh, by the way, when do the silver stocks really move? The VRIC is a speculative conference, and the market I can't say it was going to be this year or that next year or the year after. This market, believe me, will go from investment led to speculative, something we haven't seen at the VRIC for 10 years.